Hey everybody, Marty Mazzora, July 19th. Good afternoon, 2016. Quick commentary for you. This is your Tuesday commentary. Well, the market's holding up okay. S&P was down 3 points today, but as you can see on the chart, it's holding up above that purple line, which is roughly the all-time high from May 2015. The Dow was up again today. I think we've had 6 consecutive days in record territory. The fact that we've had such a steep advance and we didn't come right back down and test that support is probably positive going forward. I think a technician would tell you that at this juncture. I think it has a little bit to do with earnings. Microsoft, after the bell today, beat both the top line and the bottom line in terms of revenue and earnings. That stock is up about 4% in after hours. 74% of the 60 companies in the S&P 500 that have reported so far have beat analyst earnings estimates. 60% beat on the top line, so that's okay. I think it's going to be an okay earnings season. Oil prices have firmed up, so I don't think the energy sector is going to be quite the headwind. Dollar is weaker than it was last year. If that continues, the third quarter should be even better. So I think analysts should be warming up to the prospects for earnings in the U.S. market going forward. Overseas, we've got Brexit, of course, that is still a huge uncertainty. Got issues in the Italian banking sector. I talked about that on Sunday evening's video on international investing. Over the weekend, the Turkish failed coup. These are things that if the Fed continues to be sensitive, as they say they're going to be, to international events, these are the kinds of things that would make short-term thinkers in the market who are worried about a Fed increase feel fairly bullish about stocks for 2016. The odds of a Fed rate increase, as illustrated in Fed funds futures trading, are very low for this year. Excuse me. The odds for a European Central Bank rate cut are relatively high for this year too. Another reason to maybe begin thinking, as I illustrated in the video, that we might see a period of outperformance in that non-US portion of our portfolios over the next few years, despite the issues that are so prevalent in the headlines. Excuse me. In terms of the rest of 2016, I think the setup is pretty good. It's gotten a lot technically better, as I've talked about lately, with the breadth. I still like what I'm seeing in the sentiment indicators, particularly among professional managers. They're relatively bearish on the market going forward. That's a counterintuitive indicator, perhaps, or a contra indicator, in that when professional money is bearish, and of course it's all about returns, when things begin to look a little better, there's a lot of capital that can come rushing to the market and pushing it higher. But the headwinds will continue to be, I think, international events. If the dollar gets a lot stronger, that becomes a headwind. And then, of course, we have this amazing situation when it comes to politics here in the U.S. that, unfortunately, I'm probably going to have to start commenting on pretty soon. But for today, I think I can just leave it there and let you go with a real quick one. And look for the video a little later in the week and tomorrow's TV spot as well. Hope you have a great rest of the day, and I'll talk to you very soon. Bye-bye.